Why a broker will close your trading account. One of the most concerning scenarios for traders is the unexpected closure of their trading accounts. This can occur for various reasons, some of which may be beyond the trader's control. However, understanding these factors can help you avoid such situations and protect your investments. A recent survey revealed that a staggering 25% of online traders have had their accounts closed by their brokers. This statistic underscores the importance of being aware of the potential reasons behind such closures. Another lesser-known fact is that certain types of trading strategies, such as high-frequency trading or scalping, can increase the likelihood of account closure due to their intensive use of the broker's resources. One of the primary reasons for account closure is a violation of the broker's terms and conditions. These rules outline specific guidelines that traders must adhere to, including limits on leverage, margin requirements, and trading frequency. Failure to comply with these regulations can result in account suspension or termination. For instance, if a trader consistently exceeds their margin call, the broker may be forced to liquidate their positions to cover the losses, leading to account closure. Another common cause of account closure is suspicious activity. Brokers employ sophisticated monitoring systems to detect unusual trading patterns or behaviors that may indicate fraudulent activity, such as money laundering or market manipulation. If a broker suspects that a trader is engaged in such activities, they may take immediate action to close the account and report the matter to the relevant authorities. In addition to violations and suspicious activity, brokers may also close accounts due to financial instability. If a trader's account experiences significant losses or becomes heavily indebted to the broker, the latter may deem it necessary to terminate the relationship to protect their own financial interests. This can be particularly problematic for traders who rely on margin trading, as their exposure to risk is amplified. While account closure can be a frustrating and disheartening experience, there are steps that traders can take to minimize the risk. First and foremost, it is essential to thoroughly research and choose a reputable broker with a strong track record. Reputable brokers are more likely to adhere to industry standards and treat their clients fairly. Secondly, traders should carefully read and understand the broker's terms and conditions before opening an account. This will help them avoid unintentional violations and protect their investments. Furthermore, traders should maintain open communication with their brokers and promptly address any concerns or questions. Building a positive relationship with the broker can help to prevent misunderstandings and reduce the likelihood of account closure. Finally, it is advisable to diversify one's investments.